All righty, folks. I know a lot of you have been watching Mr. Dan Bird for months, if not years now on this channel. A lot of you have been highlighting we have to give him a Nailed It t-shirt. Yes, I have ordered one. He is getting one. And no, he does not get one for every time he is right. He
Come
gets
on.
one. Otherwise, you'd have nothing but these t-shirts, and your wife would be very mad at me because you
Well,
called S&P 500 hitting an all-time high, which happened. You called Nvidia going from 500 to 600 because of a cup and handle. Who the hell knows what that is? But you called that one right as well. So, Mr. Prognosticator, what happened last week? What's going to happen next week? And do you have my lotto numbers? I'm just wondering.
I only wish. I wish I could. Hey, the stock market is my lottery.
Oh, there you go. I like it. I like it. Yeah, so let's go back and let's celebrate what happened last week because you had a couple of big wins as far as I'm concerned. The S&P 500 and Nvidia, both calls you made early, and you got those right, buddy. You nailed it.
Yeah, I think both of those were pretty much, I mean, done deals. I wouldn't say that was going out on a limb on either one of those.
You know what? You don't give yourself enough credit. There are plenty of people saying exactly the opposite of you, and
Yeah,
even more people following those doomers because that's where they live, right? Fear sells, being afraid sells, and
that's
you were
true.
making two bullish calls, and you were right. So celebrate it a little.
Yeah, well, that's true. Fear does sell, especially on YouTube, on the internet. It's the way to get people to click on things.
Yep, yep. If you
That's
want to
true.
get, yep, yep,
I don't disagree with that at all.
yeah. So tell us how last week looked. Remind me where we can get the free newsletter, and let's dig in.
Okay, sure. A lot of new stuff on the website.
Ooh, I like new stuff.
Okay, which we're going to talk about something in the second segment
Okay.
on some of the new stuff, something that I learned at the VectorVest conference that I've now created, and how to identify or find good candidates that, strong stocks that are ready to move higher, that might be pulling back, ready to move higher.
Okay.
That's the second segment. But this one's anyone that wants my free newsletter, just come to breakpointtrading.net and click on this little link right here.
Hmm.
And you can get it for free. Doesn't ask for a credit card or anything like that. If you want to be reminded that it's available, then at the bottom you can at least log in your email address.
Mm-hmm.
Again, this free plan does not ask for a credit card. We don't sell emails. We don't share emails. So you don't have to worry about getting spammed, at least not from my site.
Mm-hmm.
But if you want to be reminded, just do the $0 one. But you don't have to. You can come in here and just click on that and read the newsletter.
Cool.
Okay, so what happened last week? And let's actually go into the newsletter and I'll show you some cartoons in here. I thought this one was pretty funny. I don't know if
Yeah,
you've seen that. I don't
I
even know
have
if
the
you,
meme. The meme.
yeah,
Yeah, the guy.
yeah, the
Yeah,
meme,
I've seen.
right?
Yeah,
So
yeah.
it kind of like is mirroring that meme. So last week we had manufacturing, crude oil, existing home sales went down. I think you
Mhm.
talked about that.
Yep.
Core retail, though,
Up.
up pretty big.
Yeah, beat expectations. Up 100% from previous months.
Yep.
The death of the consumer has been greatly exaggerated.
Yes. So what do you think about that?
I think
What
a
do you think
lot of
about
that.
that in the context of the next Fed meeting?
Oh, the Fed's not raising. The Fed sees what's coming with inflation. In my opinion, this is where we disagree. I think we still disagree. I think inflation is going to come down faster than the average person thinks, and unemployment is not going to go up as much as people think it will be. And the Fed will do something they have never done before, and that's cut rates without a crazy, recession. I think they're going to do something they've never done before. And I realize I'm out on a limb all by myself, but I still think that's
Well,
coming.
you may not be. You may not be on a limb. I'll show you at the end of this newsletter why I say that, because there's someone else that is echoing what you're saying.
And I want to be clear, I've been calling this for months, so it's not like
Hmm.
a new thing. And I don't
Right,
change my mind. So yeah, we'll see
right.
what happens.
Yeah, we'll see. And I haven't, been very strong with the opinion that the Fed might raise. I'm just saying that it's a outside possibility.
Oh, dude, zero, zero, zero
Okay.
point zero zero zero.
So I'll make it 5%.
Okay. Oh, wow. All right.
All right.
1 in 20. Okay. So
Yeah.
just to be clear, 1 in 20 Fed rate increase February 1st.
Yeah.
Okay. Quarter
Sure.
point, or are they going to do a half?
Well, no, it will only be a quarter. If they do
All
anything,
right.
it'll be a
All right. Cool.
quarter. So, and the reason is strong retail sales,
Hmm.
strong jobs,
Hmm.
GDP is still strong,
Yep. Okay.
economy is still growing at a pretty good clip,
Hmm.
matter of fact.
Okay.
So I think they've got the cover to do it if they wanted to. Um, of course, they probably, hopefully, recognize that that might finally break things
Hmm.
if they do. So that's one reason why they probably won't.
Well,
But
I think the reason they won't is this Fed has been remarkably consistent at telling the market what's coming. And
mhm,
there was zero talk last week about a potential rate increase February 1st.
yeah,
It was
right,
all about the market's too early. It's not the cuts, not in March, maybe in the second half. None of the conversation. I think there were 8 Fed speeches last week and 4 the week before. None of them hinted at a quarter point rate increase. That's the big tell for me.
so so now that you bring that up, let me just scroll to the very bottom of my
Oh, there you go.
newsletter.
Yes, I knew about these
December,
2 meetings. Yep,
yeah, December 1st and December 13th. That's 12 days apart.
it is.
Fed chair says premature to speculate on rate cuts. 13th, discuss the timeline to start rate cuts.
Yep,
So just because the Fed talks about it doesn't mean they won't change their mind in pretty short order.
I agree. And what you saw with those 2 discussions or those 2 points, and I love that you brought these up, was a complete reversal of we're going higher to
Mm-hmm.
we're being flat to going, oh no, we're going down.
Right.
They're not going to go from December 13th to now January 21st and go, oh, we're going to go higher again. They'd be freaking helter skelter, crazy, crazy people, in
Not
my
only will the
opinion.
not only will the Fed start cutting rates, but the end of QT is rapidly approaching.
I agree with that also.
So QT is quantitative tightening,
Mm-hmm.
which is where they stop buying bonds
Yep.
and mortgage-backed securities.
Mm-hmm.
Might even start selling them. But this is an interesting chart that reflects that.
Yep.
It's already started really, but
Oh yeah. Yeah.
then it looks like it's going to accelerate. So
Okay.
these are the liabilities on the Fed's balance sheet. Treasury general account currency, RRP, and reserve balances, the blue ones down here.
Right.
Those are the ones that are running off.
Mm-hmm.
So that looks to be accelerating.
Okay.
If the economic data is strong and financial conditions are improving, then what does the Fed know that we don't? Hmm.
Mm-hmm.
Here's the spread on repo versus the Fed funds rate going back to 2019.
Yep.
So it was way up here in 2019. This is COVID, this big
Yep.
line. And we're creeping back up there to where it was then.
Okay.
This is all confirming your belief that they will be cutting rates.
Without some nasty economic data. Yep.
Right. Well, I mean, I'll go back to the comment. What does the Fed know that we don't?
Oh, okay. I see what you're
Right.
saying. Well,
maybe.
I think it's a couple fold. I really do. I mean, I did the math just with shelter inflation, given the backward nature and the 12-month lag in the data, just shelter rolling over, which is currently about 60% of inflation readings, we are
Hmm.
sub 2% today.
Right.
If you do actuals versus bullshit calculation, we're sub
And
2 today.
yeah, and here's the underlying thing, that for this question, what does the Fed know that we don't? Some data suggests financial risks have risen in recent months. One of those is overnight funding rates.
Yep.
That's what that's what this is all about right here.
Mm-hmm.
Overnight funding for banks, basically liquidity
Right.
in the system.
Yep.
Another risk to financial stability is the rapid reduction in treasury liquidity. So these are the things the Fed knows that we don't. It doesn't mean that there's a recession looming necessarily.
Yep. Keep going.
Did you spill something?
One of my dogs is coughing, so I want to take care of it. Keep going.
No, no problem. But this one here, this is the overnight reverse purchase agreements and bank reserves. So reserves are dropping rapidly. So that right there is something that could cause some problems in the economy, especially if there are any bank closures like we had last spring. So end of QT equals the beginning of QE, maybe. I mean, they're going to go back to QE, right? This is an interesting survey, biggest driver of equity prices in 2024, the Fed. So this is a B of A survey for investment professionals. And if you combine the Fed at 52% plus liquidity, which is basically the Fed, at 7%, that's 59%. That most traders think that it is the Fed that is going to cause equity prices to biggest driver for equity prices. All right. Did you
So
hear any of that, by the way?
I did not, unfortunately. My Happy was having a problem I had to take care of, so it's okay.
Okay. I was just talking about what's happening right now with bank reserves
Mm-hmm. Yep,
and
I see that.
the overnight lending, which is pulling liquidity out of the system.
Yes, it is.
All right. So this right here is what could cause problems. And this is what the Fed might be trying to get ahead of by cutting rates.
You're right. That could be the thing.
Right. And then this is a survey by B of A. What's the drive? What's in 24? What's the driver of equity prices? 52% said the Fed. 7% said liquidity, which basically is the Fed.
Oh, that's interesting.
So
Yeah,
59.
liquidity is the thing that I've been trying to harp on for a while now. And I've been a step or two ahead of that chart. They're looking at overnight lending. I've
Yeah.
actually been looking at just the lending that's not happening at regional banks and all of that because they have to protect their balance sheets. I think
Mm-hmm.
liquidity is a problem.
Right. So this is a reminder of what happens when the Fed starts cutting.
Mm-hmm.
You usually get a recession
That's interesting.
every single time.
Every single time, yeah.
Get a recession after they start cutting. Now,
So let's
the
play.
reasons
Let's
for
play.
the
Uh-huh.
reasons for cutting are different, but when they start cutting, we've had a recession previously.
Yeah, it's going to be interesting because again, this one, this pandemic, this COVID, this $8 trillion, it's gumming up the works still.
Yeah, that's right. It is. We're not back to normal yet.
No, we're not back to normal yet.
This is a chart that one of the subscribers asked me to include on the website,
Mm.
which is a comparison of the Russell 2000, which is small and mid caps,
Mm-hmm.
with the Magnificent Seven.
Oh, interesting.
And I found an ETF that just tracks the Magnificent. It's called MAGS. So only those 7 stocks.
There you go. Makes it easy. Okay.
Yeah. So I did a relative chart between the Russell and that ETF. And you can see here at the beginning of, actually in December, of 23,
Mhm.
right? About halfway through that big rally, everything switched. And if you remember, a lot of people were talking about small caps, and small caps are starting to
Yeah, broaden out. Yeah, I remember that.
broaden out, come back in the picture. And this shows it, this proves it. So the Russell is small and mid caps, outperforming the Magnificent Seven, but that's now
Yeah, it has.
switched back the other way.
Okay.
All right, so this is all in my newsletter. This is why I say, you know, you're in good company. You're not the only one now that's saying that Fed's going to cut and giving reasons why the Fed's going to cut.
Yeah,
And it's
I like it.
mostly around liquidity.
Yeah, again, we're in our debt-based economy. Liquidity is the grease, the lubricant that makes it go. And if liquidity tightens up,
Yep.
it could be a
And
problem.
this right here is why regional banks are tightening too.
This is exactly what I saw kind of coming when I was saying watch the regional banks are going to pull back from lending. And yeah, this is what I saw coming.
So the other thing about regional banks, I'm going to go to my market bias matrix because I have regional banks in here, right here. Regional banks have had a nice run since November. They pull back a little bit, but they've started to move back up again.
Okay.
So, you know, they're start beginning to move back up. But the biggest thing, I think, biggest driver is the inverted yield curve,
Mm.
which is rapidly
De-inverting.
getting back to normal.
Yeah.
So it came up really fast right here, and then it dropped back down. It came up again. It dropped down last week,
Mhm.
but I don't think it has much to go to get back above zero again.
Yeah, and
And
there's two ways this could de-invert, right? The 10-year could stay flat, the 2-year could fall, that de-inverts it,
mhm.
you know, or the 10-year rises and the 2-year stays flat, or any combination of those. So, um,
Well, you want the 2 year to be higher than the 10 year.
well, that's what it is today. The 2-year is higher than the 10-year. You would,
Right.
typically speaking, you want the 10-year, which is longer term money, to cost you more than short term money. And that's not
Mhm.
what's happening today. So you
Right.
get there one of two ways. Either the 10-year goes up or the 2-year, goes down, traditionally. And obviously both those things can also happen, but that's where we are.
Yeah, here's the 2 year and the 3 month still down here.
Yeah, that's actually a more interesting one. The historical trend has been 2-year and 10-year. I don't know if
Mhm.
you have it, but you can even do the 3-month and 10-year. Um,
I
talk
don't
about
have that one.
yeah, talk about relatively short term versus long term. It's wild. Um,
Yeah, this is the 10 and the 2 up here. You can see how what I just said, it was rapidly getting back to zero, pulled back, and then started back up again.
yeah.
But
You
the
know, interesting.
two
All
year
the
and
his
3 month is still down there. It hasn't really recovered.
Yeah, I mean, there are so many kind of historical recession indicators that might get blown up this time because of all that $8 trillion
Hmm.
liquidity in the system, right?
Right. Yep.
Historically, you've told us and been right. When it de-inverts, that's when a recession happens. When the Fed cuts, that's when a recession happens. I think this
Right.
COVID $8 trillion is going to make those two things not true this time.
That very well could be true. Yep. I mean, just because it's happened before doesn't mean it will happen again.
Yeah. And I think this time is different because we never pumped $8 trillion in 2 years into our economy before. It takes more than a winter to kind of squeeze it out.
Yeah. Here's the M2 money supply chart that I've showed before.
Yeah. All the doomers love to quote this. M2's down. It's gone negative. First time since the Great Depression. I'm like,
Right.
zoom out, people. Zoom out.
Yep.
It's
Yep.
not
If
even
you
back to
just
trend.
if you just follow the normal trend, it needs to drop another 15% to get back to normal.
Yeah. Zoom out, people. It's crazy.
Right. Yep. So all very interesting stuff. And back to the market. Yes, we had a great week last week, but there are some things that are really strange about last week.
Okay.
Semiconductors had a great week. Semiconductors right here. Look at that.
Yeah, AMD went up a bunch. Nvidia, of course, went up. Yeah.
Yep. In fact, here's AMD.
Whew, look at that
Here's
week.
NVIDIA. Now
Yeah.
watch this one. SMCI.
Hmm. Oi. Wow.
Look at that. Went up 100 points on Friday.
Sheesh. I don't even know what they
100,
do.
100 points. They make servers for AI.
Wow. So they went up almost 25% in a day.
35%.
They're,
They went
oh,
up 35%.
oh,
If you take
according to
if you
that
take it from the
chart.
low. Yeah, I know. If you
Oh,
take it from the low, though, it was
oh,
up
the low.
35%.
Okay. Wow. Okay. First previous close. Okay.
Yeah.
That's a day. That's a hell of a winner.
That's one day. Yep.
Yeah.
This one, by the way, SMCI, all back through here, through this whole period, be under 100
Mm-hmm.
on VectorVest and I put this in the newsletter a few weeks ago. On VectorVest for 6 months straight, it was the number one stock.
Oh, wow. Good for them. They got that one.
Yeah, and it's a mid cap. It's not
Mm,
even a large cap.
good for them.
So going back to my newsletter again, I put in every week. I put in what's moving. Here's the sector performance. You can see communications, technology, and the Nasdaq 100 outperform for the week.
Mm-hmm.
So all the growth areas. But here's the top large caps, AMD. I mean, you can see how many semiconductors there are. 1, 2, 3, 4, 5, 6, 7 semiconductor stocks
Wow.
out of 10. We're in the top 10. And then the small and mid caps, interestingly, Supermicro didn't even make it to number one.
Mm-hmm.
This other company, which I don't even know anything about it, Industrial Suppliers.
Almost doubled. Sheesh.
Yep, went up 95%.
I'm guessing somebody's buying them.
What is
No
that?
idea. Just
KAM.
guessing.
Wait, that could be, yeah. KAMN. Look at that.
Yeah, look at that volume. Woof.
Wouldn't you love to find that one early?
Yeah. Yes, I would. I'd love to have call options on that one. That would be really good.
Yes, absolutely. Right down here at 22,
Yeah, exactly.
went to 45. We're going to talk in the next session. We're going to talk about how to find stocks like that. So the things that concern me, a couple of things I want to point out here. First of all, on this, this was one that was requested by a subscriber last week for me to add it in. And this is the National Association of Active Investment Managers. Bull bear exposure. So when it gets up over 95%, it actually can go up more than 100%. I don't really know how they do that, but there can be more than 100% of these managers that are bullish.
Doesn't make
But
sense.
when it gets
me,
up over 95, that's an extreme. So just follow these up. There's the high right there. Follow this up. That's the high. It's a negative divergence. This is 2021, just before the long bear market. But look at the divergence right now.
Ah, look at that.
Huge divergence. So these active investment managers do not trust this rally. They are repositioning to a bearish stance as the rally is hitting new highs.
Okay.
So this dash line is the old all-time high. And we took that out on Friday. All right. Negative divergence. Not good. The other one down here in the McClellan oscillator, which shows you advancers versus decliners. Again, I pointed this out previously. There was already a negative divergence back here as the market was going up back in December.
Yep.
And this was going down, but it was still above zero. So there were still more advancers than decliners, just fewer advancers, even as the market hit new highs. But now we hit even higher highs down here. but this went below zero and it's still going down. It came back a little bit on Friday, just a tiny bit, but it's the trajectory, the acceleration is even greater as we're hitting, all-time highs. That to me is a cause for concern. Now, I don't know what it means. I don't know if that means, I'm not going to make any predictions, in other words.
Yep.
That something's going to happen. Same thing on the NASDAQ. Looks very similar. I'm just pointing this out as the other thing to notice is this pink line back here. So when it peaks and rolls over, see right here, it peaked and rolled over. This is the beginning of the downtrend. Peaked here and rolled over. So, but we still made a new high. So I'm not making any predictions that the market is ready to crash.
Okay.
I'm just pointing this out as an anomaly.
Right.
It's not supposed to work that way. When you're hitting new highs, you should have more advancers instead of fewer advancers. So, all of those things are not good.
Okay.
I think that's about it that I wanted to point out. One thing that I'll make a note of is, and this will feed into the next session that we do, this top 10 list that I update every week. Somebody asked me to put a legend in here about what these colors mean.
Okay.
The yellow means it's in the first column and it's in at least one of the other columns.
Got it.
The tan means it's in the second column and it's in at least one of the other columns. All right, so CrowdStrike and Zscaler are over here and they're over here. But the greens very rarely ever happens. Before this, NVIDIA had 3 greens. So if it's green, that means it's in all 3 top 10s. NVIDIA last week had all 3 greens. The only time that has ever happened since I've been doing this is about a month or so ago when Decker's Outdoors was in all 3 of these. But this is the first time I've ever seen 3 different stocks in all 3 top 10 lists. NVIDIA, Decker's, and Arista Networks. It's in Earnings Beats, which is Tom Bowley. It's in the Investors Business Daily 50, and it's in the VectorVest Top 10. Now, what I've started doing, or actually what I've been doing as I created this previously, every time these drop off, they dropped out of the top 10, but that doesn't mean they're bad stocks. They might have dropped to 11 or 12 or 15 or 20 or whatever out of 4,000 stocks. But I've been saving them all in a watch list.
Okay.
So I thought, why don't I take that watch list and just offer it to anyone? So if anybody would like to get that list of all of the previous top 10s, it also includes all of the top 3s. So if it's red over here, that means it's the top 3 in each of these sectors.
Got it.
And also in the top 10. So it's red. If it's red, it's a top 3 and it's a top 10. That's what makes it red. Down here, I've combined all of that. So all the ones that previously made top 10s, all the ones that are currently in the top 10, and all the ones that have previously made top 3 over here are all in this one list. In the next session, I'm going to show you how to use that list to find potential candidates.
I love it. Let's get to it. Dan, one more time. What is the website? Where do they get the newsletter?
Yep, breakpointtrading.net. And the free newsletter is right here. The homepage and the books page, you don't need a subscription to get to, but most of the other things that I'm showing you on here, a subscription is required. It's $99 a year for 1 year, which is pretty cheap, actually.
Yeah, it's crazy cheap. Go back and watch how all this has evolved because it keeps adding to it.
I actually showed this to a hedge fund manager who trains traders on how to trade. And he's helping me fill out an options page.
Oh, wow.
Which I'm going to, I haven't completed yet, but when I show this to him, he goes, "Oh my God, this you should be charging $99 a month for this."
Right.
He goes, "These are all of the things that I use." He gave me a couple of ideas and some things to add over here. because these are all of the things that I use, and you've just put them all in one place for me.
There you go.
Because I've been thinking about doing this and
Mhm.
creating something like this, but now that I've seen what you've done, I don't need to do it.
There you go. Dan, thank you for coming back every week. Thank you for helping so many people. I look forward to video number 2. Take care.
You bet. Take care.